Hi, welcome to the Market Alert for Friday, the 3rd of February 2023. So yesterday we saw the Bank of England raise rates and also the ECB. This again caused the market to conclude that there's going to be a pause in raising of rates, which obviously prompt a massive stock short squeeze, buying panic in bonds as well. Is this really what you wanted, Jay? I very much doubt that Powell wanted this, but this is what is caused. So Facebook's Meta-led stock surge with assistance from central banks. Yesterday it was Bailey and Lagarde, both 50 basis points, if I recall. Let's just have a quick look. Let's go back a day before we look at today's economic news. So we were up half for the UK and also for the ECB, but there is talk that they're going to now drop down to 0.25% rate rises, but certainly the highest in rates that we've seen for a long time in the UK, and certainly Europe coming off zero as far as Europe is concerned, as you can see there. So some interesting things going on. It's been a long time, hasn't it, since rates have been at this level. Let's have a look. We're going back to 2008. So 15 years since rates were at this level. So it'll be interesting to see how much higher they go. The market thinks that they're not going to, which is why we're seeing the massive squeeze that we've got at the moment. Economic news today, of course, it's the big one. It's the non-farm payrolls. They're out at 1:30 as usual, so expect the market to have a bit of a flurry this morning, go quiet and then wait for this. No doubt they'll do the same as they've done for the last 3 months. They'll revise this 223 down if this comes out higher and make it look as if it's no big deal, and they can pump the markets up once more. Once we've got today's economic news out of the way, the market's going to have to find its own direction. The only next thing is going to be the US CPI, which I think is a couple of weeks. So it'll be interesting to see if the market will actually have some sort of a pullback. One way of doing that is to look at the implied volatility. And yesterday, this actually crept up a bit. As you can see, we're at 15.23. I expected this to be a bit lower, actually, but then the Dow isn't as strong as the European markets. It could do with the German DAX implied volatility to get a really good idea. But it's still in that area of the lows, that the longer term picture that we can see there. So it is in corrective territory, but not today. The market will want to use the non-farm payrolls to pump the market up. The last 3 times that this number has been released, it's been revised down and the market has pumped up massively. Not saying that will happen. Of course, the pattern always changes as soon as you identify it. But that's been the gist of it for the last few months. And also, of course, it would make perfect sense that going into the weekend, they don't want the market to go down, but it's due for a correction, as we'll see as we go through the charts. And we'll do that now. We'll kick off with the Dow and have a look, see what it did yesterday, the DAX and the S&P. So in the Dow yesterday, an inside bar, because obviously the range on Wednesday was brought about by the increase in interest rates, only 0.25% by the Fed. And overnight, the market is bouncing off the 5-bar moving average. It's got this 89% retracement from here to get through. If it's through this one, then we can continue to the upside through these two here as well for the Dow. In the 30-minute chart, bit of a damp squib compared to the previous day, which you'd expect. Expect more volatility today. Let's just have a look at yesterday's range for this market. I mean, that's about it over those 2 bars, and it went quiet. So only 353 points for the Dow yesterday. But let's just have a look, out of curiosity, from October, how far up this market's gone. In fact, what's interesting with the Dow compared to the others is how much weaker it is. As you can see there, we've not actually breached the high that we had here back in December. I think it's December the 13th, but if we have a look and see what we've actually put on since the Liz Truss fiasco, and go up to the 13th of December there, we've gone up 6,353 points on the Dow, which is a massive move. no doubts about it. So it's consolidating at the moment to possibly move up and take these levels out on the non-farm payroll numbers today. Again, that depends, of course, on what those numbers are and how and what they do with them after they've been released as well. In the German DAX, well, it keeps going, doesn't it? Yesterday, another buying bar all the way up, and we've got these levels here. They're easy to see if you go to the weekly chart and also the monthly chart. Monthly charts are probably even easier to see. So let's just have a look here. So we're through the 78, now 89. We've only got to get to 15,803, and then we're not far off the 16,297 either. So again, let's just for fun have a look and see what we've got to go. We've only got 784 points to go on the upside, which is nothing these days. So let's just have a look and see how far we've come since October for the DAX as well. So let's have a look. We're now into 3,466 points. Massive move for this market. And also what's interesting is that the monthly chart is coming into overbought territory. The weekly chart is getting back to that sort of level, and the daily chart, where we are, there we go, we're sort of trailing along, and we've got some divergence as well, so it's losing a bit of momentum there. Like I say, get today out of the way and we could see a bit of a correction. But for the last few weeks, since the start of the year, again, the market's put on from when the traders came back to this high of yesterday. We've put on 1,600 of those 3,500 points. So again, you can see it's been more or less parabolic, hasn't it, moving to the upside. 30-minute charts, again, you can see yesterday, range for yesterday seems to be increasing as well. We were up 282, just under 300-point range yesterday. Overnight, the market is sideways, just sitting below the averages there, the 5 and the 20. And again, the high is in, it's just a couple of points to the upside these days, isn't it? It's just about 60 points up to the high, which will take you to 15,542. Yeah, that's the number there. And of course, you've got the psychological level above it as the 50. So yeah, an interesting day ahead looking at this. Let's just have a look at the action yesterday. Straight off the bat, the market was sideways, and then it just went, and then we traded sideways in a range, and then in the afternoon it went with the Dow on the what news did we have yesterday? Let me just remind myself, we have a lot this week. Let's just go back to the US at we had of course we had all the interest rate rises, didn't we? And then the press conferences, that's what it was that moved the markets to the upside. So yeah, that continued overnight. We've had a bit of a pullback, and the market's now bounced above that. We've got a couple of gaps from when they start these sessions, which you can see there. This one was filled, and this one, has it been filled? It should be coming back. Yeah, it'll get filled if it comes back down to the close there. At the moment, the market's sideways. In the 5-minute chart, it's got the 200 MA in the way. It's certainly sideways at the moment. But then again, it's only 6:30 a.m. as I'm recording, so we'll see what happens when the futures open at 7 a.m. In the S&P, well, we're taking out the resistance to the left here. As can be seen there, 4138 has been taken out. There's a bit of a supply there yesterday, inside overnight, a bit of weakness. But in the 30-minute chart, again, you can see a bit of a choppy one. Went up in the electronic market, 230 went up. And then overnight, you can see we've been a bit choppy there, now back just below the DP. Meanwhile, in FTSE land, Bailey raising rates by 0.5% yesterday. You can see there that we're trying to move back to the upside. We haven't taken out the recent high to the left, which is interesting, but there's still strength there. We've got green bars all the way. We just need to take out the 78 and the 89, and then we go back to the all-time high that we've seen in the monthly chart, just over here at that level of 7903, if I recall. Let's just have a look. Yeah, 7903. And we're just through the previous resistance of that 7790. So heading back to the all-time highs for all of the European and markets, certainly the FTSE and the DAX. Wouldn't be surprised at all. I mean, Europe's a basket case and the market's nearly back to all-time highs. Make of it what you will. 30-minute chart for the FTSE yesterday, a bit choppy, as can be seen there. And sideways, needs to just stay above the DP, but the high again is a stone throw away from where the market is currently trading. In the currencies, GBP, JPY, bit of weakness there as the dollar moved higher yesterday. Overnight, the dollar starting to lose a bit. So prices pulling back, going into oversold territory, sitting at 78% retracement there at the moment. So in the 30-minute chart, you can see the reaction to the Bank of England there, and then moving lower and continuing lower overnight, trying to get back above yesterday's low at the moment for the GBP, JPY. GBP USD down yesterday as the dollar moved strongly. It didn't kick off until the afternoon, and you want to see the impact it had on gold and silver in just a moment. So the pound coming under pressure as the dollar regained after Powell had increased rates by 0.25%. Goodness knows why it should have tanked. But again, it goes just to show you what you can do when you have a trading desk at the Federal Reserve. The 30-minute pound, again, you can see the market's reaction. This would normally have gone up and stayed up, but obviously they believe Bailey that oh no, we're going to increase rates much further now. That's going to be it. When you've got food inflation running at 20%, this is a joke. Well, it's beyond a joke. It's just taking the Michael, isn't it? But hey ho. Anyway, we're down at the low, trying to get back above that at the moment for the pound. And dollar index up strongly yesterday, and overnight a bit of weakness there. So have a look at the 30-minute chart. That's why everything else got hammered, but it didn't start until the onset of the real-time trading, as you can see from the volume there. Let's get rid of that. So yeah, from midday with the rate situation, and off we went, and that was enough to do some serious damage to the metals markets. So let's have a look at those. So in silver, as I keep saying, they won't let it stay above $24 an ounce. They absolutely crushed it yesterday, and they're still doing it on the overnight market as well, as can be seen by the 30-minute chart. As I said to you, it wouldn't stay up yesterday, and it certainly didn't. Over $1 to the downside yesterday, more than $1. We're now at yesterday's low. It could come back, depends on the non-farm payroll numbers, but it's going to find it very difficult to get back above that 24 and hold. It just will not hold above that level. I don't know what's going on, whether there's a massive short position at this level where losses will be incurred and then they keep crushing it. But you only have to look at the daily chart and you can see exactly what's going on. Sideways move, but it's amazing how it just gets crushed when it gets back to those 24 level. Gold also coming under some hammering yesterday as well. Selling pressure there, bit of a spike in the volume, but we're oversold in the sideways move, so we could see this moving back to the upside. 30-minute chart absolutely crushed as well. Monkey hammered. Didn't get to the previous, hasn't traded to yesterday's low on the overnight, unlike silver, which, like I say, has already been hammered overnight as well. So in the gold-silver ratio, you can see yesterday it dropped sharply as silver got above $24 and headed towards $24.50. And then it completely changed at lunchtime, and then you'll see that silver being crushed a lot faster than gold, and then that means that the gold-silver ratio will come back the opposite way, which can be clearly seen there. I was trying to get at a smaller time frame, but for some unknown reason, it's not letting me change it down to a 30-minute. I don't know what's going on there. But yeah, so we saw it being moved down as silver price moved up, and then when they crushed the silver price, it came back. So yeah, unbelievable, but no surprise. It's gone on now for I don't know how many years. I've been watching this since 1991, where they continue to do this, and they will not let the price move higher for some bizarre reason. But there you go. That's a whole subject in and of itself. Okay, so let's see what the non-farm payroll numbers do today, and yeah, I'm sure it's going to be the same pattern as last time, as the last 3 months. They will see the market move lower. They'll revise the numbers and then bring it back. It's Friday. What else are they going to do? Okay, that's it. As ever, thanks for watching. See you in the next one.